Hello everyone. I, Kirti Sikthya, will be taking up the concept of cost sheet today. Now, when we say cost sheet, what do we mean by that? Basically, it is a statement of cost. Statement of cost means it helps us in the finding of the total cost incurred to produce the goods or finished products. Second, it says it is a measure of cost control. That means it helps us in cost reduction. That is, when we prepare the cost sheet, we get the breakup of each and every type of cost here. So here we can see to that which cost is high, and that will help us in the reduction of those costs. The third one, it helps in the fixation of selling price. As I just now said, it helps in the calculation of total cost. When we get the total cost, to that we add the profit margin, and the resultant answer is the selling price. The last one, it facilitates in managerial decision making. As it helps in cost control, it is facilitating a role of the managerial decision making process. Now, when we talk about the actual definition of cost sheet, here it is. Cost sheet is a statement designed to show the output of a particular accounting period with the breakup of costs. Now let us take out the key elements in the definition. The first one is statement. We had just now in the previous slide read that it is a statement of cost. Designed to show the output. Output means we calculate the cost of the output, that is what we are producing, and of that output how much we are selling it off. Of a particular accounting period, that means it is calculated, this cost sheet is prepared for a accounting period, that may be 1 year, that may be 6 months, that may be quarterly, along with the breakup of cost. Now later on, when we do with the format of the cost sheet, we will see that it has each and every breakup of cost. The best part, it just does not deal with the total cost, it also helps us to finding out the cost per unit. See, it provides information relating to cost per unit at different stages of the total cost of production. The next one, components or elements of cost. There are 4 components of cost in cost sheet: prime cost, works cost or the factory cost, cost of production, total cost, also known as the cost of sales. The first component, which is the prime cost. If we define prime cost in one sentence, it is said that it is the total of all the direct expenditures. There are 3 types of direct expenditures: direct material, direct labor and direct expenses. And when we add all these 3 direct expenses, we get the total which is known as prime cost. The next one is factory or works cost. The prime cost which we just now found out, to that when we add the factory expenses and when we adjust the opening and closing stock of WIP, the resulting answer is known as factory or works cost. The next one is cost of production. To the factory cost, when we add the office and admin expenses, we get the cost of production. And the last one is total cost. To the cost of production, we add the last expenditure, which is selling and distribution overhead, and the resultant answer is total cost. Direct material. This was the first part of prime cost in the last slide. Now, what is direct material? It refers to the cost of raw materials consumed. How do I find that out? It is basically opening stock of raw materials. To that we add the purchases of raw materials. To that we add any direct expenses which is incurred for the purchase of raw material, as in carriage inward, octroi, etc. To that we deduct the closing stock of raw materials, and then the final answer to this formula is known as direct materials or raw materials consumed. See, the cost of direct material is found by adjusting the opening and the closing stock of materials. Now we come down to the indirect expenditures. The first indirect expenditure which we have to consider in a cost sheet is factory expenses, or we also call it as factory overheads. What is that? Any expenditure which is incurred within the factory premises is known as factory expenses. Any cost of indirect material, indirect labor, or any indirect expenses, right? The next one is office and administrative expenses. So how do I define that? Any expenditure, that is indirect expenditure, which is incurred in the office premises is known as office and administrative expenses. The examples for these are salaries of office staff, depreciation on office building, rent and rates and taxes, and etc. The last one, selling and distribution expenses. So these overheads has two parts, selling and distribution. Now how do I define selling expenses? Any expenses which are made in order to make the goods ready for sale is known as selling expenditure. For example, packing charges, right? Next one is distribution expenses. So how do I define that again? Any expenses which are made to distribute the goods for selling purpose is known as distribution expenses. Example, delivery van expenses, delivery van depreciation, and etc. Now here we come with the pro forma of the cost sheet. If you see the heading, cost sheet of. Of here means the concern for which we are going to prepare the cost sheet. For the year ended, it is the accounting period for which we are going to prepare the cost sheet. See, I had told you prime cost. The first main component is prime cost. How do I calculate that? The first one is direct material. How do I calculate direct material or raw material consumed? Purchases plus opening stock less closing stock will result in materials consumed. To this we add the direct wages and direct expenses to find out the prime cost. To this we add the factory or the works overhead. To that we adjust the opening stock of WIP and closing stock of WIP, that is work in progress, and the resultant answer is works cost. To this we add the office and admin overheads, and now what we get is cost of production. Now let's pay attention here. Cost of production, what is that? It is the cost of producing the output. Here the output is the number of units which we are producing. Next to this we add the opening stock of finished goods and we deduct the closing stock of finished goods. The resultant answer is cost of goods sold. Now please try to differentiate between cost of production, which is COP, and cost of goods sold, which is COGS. The difference between them is COP is for the output and COGS is for the number of units sold. Let's take an example. Suppose we are producing 1000 units and out of that we could sell off 800 units. So what is the balance 200 units? That is my closing stock, right? So when we calculate cost of production, that is calculated for the full 1000 units and COGS is for 800 units. So hence when we adjust the opening and closing stock, what we get is the cost for the goods which we are trying to sell it off, right? Now to this we add the selling and distribution overheads. What we get is cost of sales, also known as total cost. We add the profit margin and what we get is selling price. Now in the first slide, if you remember, there was one objective of cost sheet, that is fixation of selling price. So here we can see how do I fix the selling price. So that's it with the concept of cost sheet. So thank you.